In this video, we're going to talk about the top 10 best monthly dividend stocks for passive income that you may want to consider adding to your investment portfolio. So, before we start, please like this video and subscribe to our channel for weekly updates. Let's get started. During the current market downturn, monthly dividend stocks can be very alluring for investors. Still, the value of many of the best dividend stocks has gone down a lot in the past few months. The pullback offers a fantastic chance to buy dividend stocks in large quantities and establish a reliable income stream. Typically, companies with dividend stocks have strong dependable earnings that can be reinvested for the benefit of their shareholders. It can significantly lessen investors' losses during the current bear run. Investors look for stocks to safeguard their portfolios during economic downturns. In essence, holding onto these stocks pays investors, and investors may reinvest their earnings to accelerate portfolio growth. Having said that, here are our top 10 monthly dividend stocks that you may want to consider adding to your portfolio for passive income. Number 10. Realty Income Corporation, ticker, O. Realty Income Corporation is one of the best monthly dividend stocks on our list with a 28-year dividend growth track record. The Real Estate Investment Trust has paid 627 consecutive monthly dividends on its common stock throughout its 53-year operating history. It currently pays a monthly dividend of $0.248 per share, with a dividend yield of 4.94%, as of October 2022. In October 2022, Raymond James maintained its outperform rating on Realty Income Corporation with a $68 price target, as the firm sees the company as a strong risk-reward play within the net lease amid the uncertain market situation. Number 9. Apple Hospitality REIT Incorporated, APLE. Apple Hospitality is another REIT, but one focused on a diverse portfolio of upscale hotel properties that span almost 90 different markets in 34 states. These properties are branded under the Marriott, Hilton and Hyatt nameplates and include locales such as Boca Raton, San Diego, and New York City. With pent-up demand for travel in the wake of pandemic, Apple Hospitality REIT has seen strong revenue lately and its stock has responded in kind. Apple Hospitality shares are down just under 5% year to date, which is pretty darn good considering the S&P 500 is down about 18% in the same period. Number 8. Stag Industrial, ticker, STAG. Realty Income was pretty darn close to Amazon.com proof. But fellow monthly payer Stag Industrial proactively benefits from the rise of internet commerce. Stag invests in logistics and light industrial properties. You know those gritty warehouse properties you might see near the airport with 18-wheelers constantly coming and going? That's exactly the kind of property that Stag Industrial buys and holds. It's a foregone conclusion that e-commerce is growing by leaps and bounds, and Stag is positioned to profit from it. Approximately 40% of Stag Industrial's portfolio handles e-commerce fulfillment or other activity, and Amazon.com is its largest tenant. E-commerce spiked during the pandemic for obvious reasons. As stores have reopened, the effects of that spike have dissipated somewhat, but the trend here is clear. Consumers are making a larger percentage of their purchases online, and that trend only goes in one direction, which is up. Yet there's still plenty of room for growth. As crazy as this might sound, fewer than 14% of retail sales are made online according to the U.S. Census Bureau. Furthermore, the logistical space is highly fragmented, and Stag's management estimates the value of their market to be around $1 trillion. In other words, it's unlikely Stag will be running out of opportunities anytime soon. Stag Industrial isn't sexy. But it's one of the best monthly dividend stocks to buy in 2022, with a long road of growth in front of it. And its 4% plus yield is competitive in this market. Stag Industrial's dividend yield is 4.2%. Number 7. EPR Properties, ticker, EPR. EPR Properties, formerly Entertainment Properties Trust, is a real estate investment trust, or REIT based in Kansas City, Missouri, that invests in amusement parks, movie theaters, ski resorts, and other entertainment properties. It owns 353 properties as of 2022. EPR Properties has recently seen its stock dip due to rising interest rates. However, another major issue for the net lease real estate investment trust is that one of its largest tenants, Cineworld, filed for bankruptcy. However, the REIT has a healthy cushion to maintain its strong dividend numbers. After paying its dividends, it expects to generate an incredible $150 million in excess cash. Moreover, It operates an investment-grade balance sheet with plenty of liquidity, including $1 billion in an undrawn credit facility. In expanding its portfolio, it will be looking to invest $500 million to $700 million in acquiring new real estate this year. Those deals are likely to help diversify its exposure to the theater sector, helping improve the long-term sustainability of its dividend. EPR Properties dividend yield is 8.2%. Number 6. Agree Realty Corporation, ticker ADC. Agree is a publicly traded real estate investment trust or REIT. If you're unfamiliar, this special class of corporation is granted preferential tax treatment to facilitate its capital-intensive operations. And in exchange, all REITs must deliver 90% of taxable income back to shareholders. Agree is primarily engaged in net leased retail properties, meaning tenants pay for the upkeep and taxes while ADC just cashes the rent checks. Its diverse portfolio spans 45 states and comprises 21 million square feet of gross leasable property, with tenants such as Walmart Incorporated and Home Depot Incorporated. That makes for a stable operation that can support regular monthly dividend payments to shareholders. Agree Realty's dividend yield is 3.7%. Number 5. Horizon Technology Finance Corporation, HRZN. If you want the stability of a monthly dividend stock that delivers consistent income but you also want the potential for growth, consider Horizon. As the name implies, this financial firm invests in high-tech and high-potential startups, including medical technology and green energy opportunities as well as traditional electronics and software. Though a rough environment has caused HRZN to drop about 20% this year, that's not as bad as some other tech-focused opportunities and is similar to the rest of Wall Street. The generous monthly dividend is a good hedge against further declines, however, and the growth-oriented business could set investors up for growth if and when bluer skies return to Wall Street in the coming months. Number 4. San Juan Basin Royalty Trust, ticker SJT. San Juan Basin Royalty Trust is a Texas-based express trust that owns interests in various oil and gas properties in the San Juan Basin of New Mexico. It pays out higher royalties when oil and gas prices are up, as they have been of late. Consequently, its revenue growth on a year-over-year basis is 171.5%, comfortably ahead of its 5-year average of 47%. Its stock sold off earlier in the year amidst a strong pullback in U.S. natural gas prices after the Freeport LNG explosion. Once export capacity improves, natural gas prices will trend northward, thanks to rising European demand for securing non-Russian gas supply. San Juan Basin Royalty Trust's dividend yield is 15.16%. Number 3. Gladstone Capital Corporation, GLAD. Gladstone operates much like a venture capital fund or private equity firm, searching out profitable investments in other businesses and passing a piece of the profits on to shareholders. It is primarily focused on small opportunities, through investments ranging from $7 million to $30 million apiece. Its portfolio includes positions in restaurants, manufacturers, technology enterprises, and others. The diversified debt portfolio helps to deliver consistent payouts every month that are roughly 5 times that of the typical S&P 500 stock. Number 2. Cross Timbers Royalty Trust, CRT. Cross Timbers Royalty Trust is the smallest stock on this list at just under $150 million in market capitalization. However, it is a monthly dividend stock in the energy space that's worth a look because of its partnership model that slowly brings its energy reserves to market and delivers the majority of the profit from those sales right back to shareholders. At the end of last year, CRT boasted 2.5 million barrels of oil and 14.3 billion cubic feet of natural gas underground, so there's ample resources left to ensure continued payouts for a while. And with a generous yield among the largest on this list, this monthly dividend stock is worth a look despite its small size. Energy prices remain elevated in 2022 and chances are this small cap stock will continue to provide big dividends in the near term. Number 1. LTC Properties, ticker LTC. LTC Properties is a REIT specializing in senior housing communities and skilled nursing centers. Its operating results have fluctuated over the past several quarters. It's been posting some strong numbers. It is likely to benefit from the secular trend of an aging population in the US, which bodes incredibly well for its long-term positioning. Its second quarter results were solid, with it beating revenue and EPS estimates by 11.7% and 9%, respectively. Moreover, Total sales of $43 million topped consensus estimates of $37.9 million and $38.1 million from the same quarter last year. Rental income came in at $31.6 million compared to $30.3 million in the prior year quarter. Moreover, total expenses rose by a mere 5.5% due to cost efficiencies and lower depreciation charges. On top of that, it reported a hefty $38 million gain from real estate sales. Therefore, LTC remains in a strong position to continue capitalizing on senior housing and skilled nursing properties by expanding its margins. LTC Properties' dividend yield is 5.92%. These monthly dividend stocks have the highest dividend yields in their industries and are a good way to protect yourself from inflation. While most dividend stocks make their payouts on a quarterly basis, stocks that pay monthly dividends can be particularly appealing to investors who regularly incorporate those dividends into their household budgets. Stock prices can be unpredictable, but dividend payments from high-quality companies are reliable sources of cash flow no matter if the stock market goes up or down. Dividend stocks can also generate long-term upside for investors. Which of these monthly dividend stocks would you consider adding to your investment portfolio for passive income? Let us know in the comments below. And don't forget to like this video and subscribe to our channel for the best stocks to buy and the latest investment strategies for building wealth. Thank you for watching.